Welcome to the Trading Lounge and the Day Ahead Report, and here we're looking at the S&P 500, and we're looking for this wave 2 to come into play through here and then further upside. So from if this does occur, a drop say below the 1410 there would sort of indicate that that would be the case. So we'd be looking for a 5-wave structure to the downside, coming close to the 1390 here before we see a push up. So that's on the cards there. So just be aware of that. And Wednesday and Thursday can bring in sort of swing days because most of the news events are on those days. The Dow Jones here, this is a daily chart here, just to point out that the supply and the resistance would be around the 13.2 and the 13.3 there. The 61.8 retracement level from the high there is also around the 13.200 as well there. So just drilling into that, just understanding that, and or being aware of that, and then sort of drilling in through here. We've been counting this little wave structure to the upside here, as you know, and it's been jogging along quite nicely, and it does look like it's expanding to the upside. So even though I just mentioned then on the S&P 500 that we can be expecting a bit of a turn there, this is still going quite nicely to the upside, but just remember this is the 61.8 retracement level through here. Yes, we may get a little push up through here, and if we just drill in and have a little look there, that will probably be the case. Just checking out for the last low here. 1, 2, 3, 4, 5, ABC, so it's up for 1 and back for 2, then up for 1 and back for 2, for 3, 4, 5, so that's 1, 2, 3, 4, and 5 to here, an A and a B and a C probably to here. So there can be another set of 5 waves to the upside through here, but dropping out of group 2 here to the downside would take that out of play, and that looks like that may be the case. Can't really tell on this, and be at the end of the session as well. The other, let's have a little check here as well. This is China here, and we've been looking for the low, and it's pushed it back up above the 2000, which is nice. So this move up here, we're still looking for this to play out in 5 waves as well, because once that's complete, then they'll probably do that around the old supply areas here. Then we'll see a corrective move here as well before we see any upside. So that thing on the S&P 500 having a retracement level, a retracement could certainly be on the cards, and also too when we look at some of the European markets like the DAX. And we were looking at this being a corrective pattern through here, and we've observed it and traded it moving to the upside through here. So this is a sort of a typical 4th wave here. So we'll be looking for 5 waves in here as well. So it's also due for a correction as well, and the FTSE would be the same as same again as well. Also the ASX 200 as well, as you see in here as well. It has pushed up nicely, and it's operating through the 4500 here. So I think that this, just logically speaking anyway, this move up through here, it's been a nice trend. It's at old highs as well. So it should make a new high above the 4581 there, whatever it is. But then come back and check into here as well before we see any further upside. Just speaking sort of logically here, and also looking at a 5-wave structure moving up through here, and we're looking at this as being a top of a wave 3 here and a wave 4 here, and then looking for 5 little waves in here, which we have been doing. So if we go in and have a look at those here, that would be those little 5 waves we've been drawing out through here. So obviously there's probably a couple of ways to count this little structure here, but I do feel that this is a 3rd wave through here, and we'll get some sort of 4th wave here. 4th waves are normally sideways and complicated, so we could end up with some sort of triangle pattern through here before we see a break to the upside. The old highs on the cash around the 4581. So, the target was for the 46 up here. So, we need to expect some sort of corrective pattern across here. We have seen the base metals last night up quite strongly, and obviously that's going to be pushing the materials sector. And we're seeing BHP, US BHP above the 72, and our local BHP above the 34, the Fibonacci number 34, which is important. So we're seeing them stretch their legs out a little bit. We see FMG snap back yesterday as well, and Rio's been chuffing off quite nicely as well. So the stronger base metals, and now China's come into the swing of things with their 486 billion stimulus back into the market, is giving that sort of little push to the upside. We're just sort of mindful that you always get the opposite of what you see. So we're just mindful of a little correction in the market. But let's have a look at the copper market. This is the LME copper here on a daily chart, and we normally look at the US, and we will do that in a moment, and we use the US because it's the last closing price and it will affect us on the opening. But just this particular pattern through here, I just wanted to point out in that we do have this three-wave structure to the upside here, which makes it a corrective pattern, and the same with this one to the downside as well. That's corrective in three waves. This is also three waves to the upside as well. So we're pretty much getting a sort of a triangle pattern through here, and a triangle pattern in Elliott terms would be a five-wave structure in terms of 1, 2, 3, 4, and 5. And each structure within those five waves is three waves of each. So, we do need to expect that, looking at the LME copper here, based on at 8,000 here, finding sort of resistance here shortly. The supply would be a little bit further up there, but anyway, just understanding that pattern. So we're trying to track this little guy up through here, and looking at the local. Sorry, the US market here. We're looking at this structure through here, and we've just been counting the little five waves from this little point here in terms of the 1, the 2, the 3, the 4, and the 5 up through to here. But I do feel that there's more to go, even though that like another wave, because this can certainly be the A, the B, and the C wave up here. But even so, we still need the 1, the 2. This would be all of the third wave up through here. There'll be a fourth wave here, and then a fifth wave through to here. So, but point being is that we're at the 370 mark here, so we're going to see a some type of correction through here, and but all sort of positive, and also the US BHP as well. You can see now that it's nicely above the 72 here, and we could see that that it was going to push up through there all the same, and off it goes. So, and the same with Rio and the other markets as well. The US dollar index, of course, the US dollar's got a lot to do with this as well, and we'll be looking at that in a moment as well, to understand its wave count as well, which of course, once it finishes its ABC correction, then we'll see. I've got a chart here for that. This is just a 20-minute chart, but basically what we're looking for here is we're looking for an A wave, a B wave, and a C wave. And once this C wave is finished, then this moves down further, and then we'll see those commodities push further to the upside. So that's good news there. The oil market just moving along a little bit. Oh, it's already fallen out of bed. So anyway, wave 4 was coming in through here, and we'll be looking at wave 5 coming down closer into the 85 mark through here. So try and count 5 waves in here. Look at that on a 20-minute chart. The gold market as well. There's a couple of ways to count the gold market. It's a little bit sort of tricky. What we've mentioned before, if the 1720 becomes the support, then we can look to the long side up there. Technically, it's sort of 1725, but support on the 1720 would see the further upside there. Otherwise, we'll be looking at further downside through here, and a breaking of, say, 1705 would create that move to the downside. I did mention 1700 here, just speaking the obvious, really, but about 1705 is breaking of 1705 would create that further downside there. So, like I said, in trading this to the upside being above, because in terms of trading, you always need to be on the right side of the closest largest number, and if we're on above 1700, then you really need to be looking for long trades above that there. So pushing, if we've got a smaller chart here for this, yep. So looking at being above 1700 here, be looking for support on 1710. You can see that that's it's moved above here, and there's going to be a larger correction. So if it does move back down through here and then find support back up there again, that means that it's tested lower, and then you can move in from that point there as such. The silver market is much the same as well. Looking for, we're considering this being a corrective move up here, the same with gold as well. Don't worry about the wave counts too much, but any sort of weakness in this area here, which is starting to show now, then start looking for short positions. But normally you wouldn't short being above the 33. You'd normally wait for that to be under 33 as resistance there. Such, but the shorting positions probably could be found if the pivot within group 1, the 10, 20 and 30, the 20 here, if that becomes the retested resistance and it's tested, then start shorting under the 33.17 at that stage there. Alrighty, let's have a look at FX and get a better understanding of the US dollar. Okay, the platform I was just using stalled on me, but I'll just use the daily chart here for the US dollar here. A couple of interesting points here really is that this move through here is corrective, and this move down through here, this 1, 2, 3, 4, 5 is an impulse wave. So we've got 5 waves there as such. So after we get 5 waves, we get a counter trend in terms of an ABC, and that's what we're looking for here. So we'll be looking for something like this. We may have completed the A wave here, or may not. There may be one more little push higher, but we'll just see how we go. It's not going to make a huge sort of difference here, but we are looking for a move like that. So we're either just starting into this B wave here, so an A and a B and a C wave here. This B wave here will be in 3 waves, and the C wave over here will be in 5 waves here. But the good news is that once that's completed, this ABC is completed, then we'll be looking at another 5 waves down to the downside. And while that's coming down through here, we're going to see stocks be pushing to the upside in reverse to that. So we're going to see a strong euro trade, strong S&P 500 trade, and so forth. So that's what we're looking for, and that's where the main, any sort of longer term trading or catching a decent trend is going to come from this point here. But it's still about, I don't know, maybe a week before we get from from here through here and back up through here. So we're still a little way off just yet. So it's probably come the week before Christmas as a bit of a Christmas present. So it might pay to be a little bit more diligent over the Christmas period, just to get a start on this trend to the downside here, and a trend to the upside in the euro and the S&P 500 and Dow and our local market and so forth. So yeah, a bit of navigating for a week, and then we've got a nice trend coming. So you just got to work with the market. There's not a lot you can do about that. So anyway, that's the point to be looking for there. Alrighty. Well, good morning and good luck.